Hello, Cleveland, and everyone from everywhere else. I hope you're having a wonderful Thursday. Let's dive right into the charts. All right. So, since yesterday, we were looking at this symmetrical triangle, and we're suggesting that it would go down because, well, hey, symmetrical triangles tend to go down. However, this time it did not. It went up. Now, that would be the measured move from the bear flag, not the symmetrical triangle. Symmetrical triangle, you would take it from the top of the triangle, which you could say was there, but top of the triangle to the bottom. Beep. And that would give us the move, and the move would be right up back to 108. But it didn't get that high. Didn't go that high, so let's just delete that. And we'll also delete that move, and this bear flag has now been completely eradicated, invalidated, whatever you want to say, but that's gone now. So what are we looking at on the 90-minute chart now? Well, excuse me, had a sneeze there. Well, there's no obvious patterns popping out on here. Possible bear flag or bull flag forming here from this run up. However, with the Stokes pointing down and the RSI pointing down and being under its signal line on both of those, we can maybe expect some further downside. How far down? Well, most likely to retest that 104 level as support. It has been flipped to support here on the 90-minute chart as well as here on the 6-hour chart. However, not here on the daily chart. Not yet, at least. We'll need to see a candle close and open and close over that 104 level in order to say that it has been flipped back to support. That would be the main flip that we'd want to see is here on the daily. And I mean, like, it's good that it's flipped here on the 6-hour chart. It's great that it's here on the 90-minute chart, but we want to make sure that it flips here on the daily chart before we actually say, hey, that's support again. This is good stuff, good stuff. We're not, let's say that's support again. Good stuff. Anyway, so what are we looking at here on the daily, on the 90-minute chart? Like I was saying, maybe a bull flag here forming. We are seeing maybe something like that. This is just a possible one. It doesn't really have much of a head going for it. But if it was doing something like that, and then we would take the measured move from the breakout point, we'll say from there, and that would bring us right up to about 109.635. But, we'd be right up on that all-time high and be testing it as resistance. Now, we might break through, or it might act as resistance, and we might bounce off of it and come back down. We'll see what happens. However, with the Stokes pointing down like this, we've got to also be looking for a Bart Simpson to occur. Now, what is a Bart Simpson? A Bart Simpson is actually just when price action comes right back down. Forms what ends up looking like a Bart Simpson head. What does a Bart Simpson's head look like? Well, it's flat on both sides and then spiky on top. So it would be up, flat, up, and then back down. So we'll watch for the Bart Simpson, but hopefully more so we'll be seeing that bull flag play out and a retest of that all-time high happen. If that retest happens, well then, hey, we're looking for that breakthrough to bring us up to the measured move of this bull flag that's here on the 6-hour chart. Needs to be a little bit adjusted with that new high there. However, we do see that from our old bear flag, we are breaking out of it. We broke out of it. We could even turn that to green. Turn that green and draw another top trend line. Where would it go from? Well, it would go a little something like that. That one would be blue, and yeah, let's watch and see what happens here. We can expand this out a little too, just so that it's not in the way quite so much. Move you over to, and we'll take out that wick also, because we don't need that wick there. Bring it over a little more. There you go. All right, so now it's not in the way quite so much. All right, so yeah, we adjusted the bull flag here on the daily or on the 6-hour chart. We're still looking at, you know, a price target of 115. If we're going to measure it from the less conservative measurement up here, well, then we're looking at like 121. But I'm going to keep it at the more conservative estimate of 115 for the next breakout, the next all-time high levels. Now, if that happens, well, we're also still in this bull flag on the daily. And, well, hey, let's take a see. Where did that go? That one went up to 133, if I'm correct. Yeah, 133. So we'll be watching for that as well. If that 115 level gets broken and just everything goes crazy. But, you know, before any of that can happen, that 109 level needs to be broken as well. We are seeing the bull flag on all the time frames. So hey, man, the TA is pointing bullish. The TA is telling us that hey, bullish things are coming, and we should just stick with that mindset for now until we see some, you know, other signals telling us hey, bearishness is coming. There is one kind of bearish signal here on the weekly chart. I didn't go over it this week, but if we look at the weekly, we kind of could see a double top pattern forming here. So we really do need to see a breakout to new all-time highs to invalidate that double top. Because if that double top does hit, well, hey, maybe we'll get stopped, you know, here at the 94 level, and this bull flag will remain. But, you know, if that double top hits, we come back down, and that 94 level breaks, well, then, hey, man, where's that going to go? Well, all the way back down. Double tops usually tend to play all the way back down to where they started, or at least the 786 retracement, which should be over here around 76,000. Not to scare you, though. Like I said, we're still looking bullish. Still looking bullish for now. I'm going to get rid of those drawings. Delete you. Wow. No. Can we go back? Oh, I see. I'm still on the brush. That's why I couldn't delete it. Okay. Hey, you should be moved over a little as well. Move that over. Click there. Delete. That one too. Delete. And bring that back up. And there you go. All right. So, yeah. Oh, one more thing. We did break up over that 200 on the 90-minute chart as well, which is bullish. Being over the 200 is a good thing. You'll see that we're still over the 200 here on the 6-hour chart. In fact, bounced off of it a couple days ago. And well over it here on the daily. However, you will notice that the 200 is hovering right around that 786 retracement we just talked about a minute ago. The indicators. Volatility is low on the daily. However, the Bollinger Bands are fairly far apart, and there is still room to run up on the high side back to all-time highs. Now, it could change quickly. It could start running, the BBWP, the volatility indicator, can start running up fairly quickly. In fact, you'll see that it is high here on the, fairly high here on the 6-hour chart, and very low here on the 90-minute chart. Well, the Bollinger Bands do still remain pretty wide. So volatility is going to be remaining here in these Bollinger Bands. And as we move forward with more candles, these Bollinger Bands are going to squeeze in. And then we're going to see another squeeze. And then we'll see another breakout. To which direction, can't tell you. But it's looking like the upside, perhaps. Why the upside? Well, we're seeing stochastics moving down fairly quickly. If we can see RSI maintain a position above the 50 here, and the price action maintain a position above, oh, let's just say it's SAR of 104. Let's just say 104. If it can maintain a position over 104, while RSI maintains a position over the 50, and the stochastics come down to overbought or oversold territory and then start curling back up, well, then we're looking at this bull flag playing out. However, if we see the RSI coming under that 50 or price action coming down, you know, under that 104, then expect further downside. Right back to where we were before, most likely, you know, that 996, but with stops, you know, maybe at this 1025 level. But again, I'm more bullish right now. I want to see the Stokes reset and then RSI keep up, and yeah, that keep going. And then if that happens, then the Stokes here on the 6 hour will get stuck in overbought territory, which will be great, because if they get stuck in overbought territory, they'll shoot RSI up and it'll shoot price up. Where to? Well, first to test that, all-time high, and then to that 115 level we're talking about. Plus, if the Stokes get stuck here, well, then the Stokes here on the daily are going to start moving upwards, hopefully breaking up over the 50. We see them over their signal line now, which is bullish momentum. We see that the RSI has broken over its signal line, showing bullish momentum, and it's in the over the 50, which is in bullish territory still. So let's watch for this uptrend that we're seeing on the daily. Higher lows, higher highs, higher lows, higher highs. We'll see if this can continue. We need to see a higher high here, basically, is what we need. We need a higher high. Otherwise, the trend's going to turn downside, and we're going to see prices probably heading back down to, 104, and then if not 104, then 99.6, and if not 99.6, if that doesn't hold, then we're looking at 94 again, which would still remain in this bull flag on the daily. And really, until that 94K level drops, we don't really have to be generally bearish. We could switch to generally or short-term bearish if we see something on the 90-minute chart over the next couple of days. But the next week or so should be bullish. The next couple of weeks, the next month-ish should be bullish. We'll see it on the daily, and we should see that next run-up in price. All right. Where to? Oh, yeah, let me just do this one more time. I'm calling 133 by St. Patrick's Day. Right there. 133 by St. Patty's Day. Thank you so much for watching. Music was provided courteously by Veloa, Luminist, and Sax Squatch. Much love. See you later.